JPMorgan said in a research report Wednesday that Ethereum's Shanghai upgrade, scheduled for mid-March, will raise the blockchain staking ratio. In the medium term, this will have a positive effect. The average for other proof-of-stake networks is about 4 times as high as Ethereum's current 14%, suggesting plenty of room for growth. Liquid staking protocols such as Lido are becoming major decentralized finance players. They could provide liquidity to retail investors who would otherwise face a barrier of 32 ET for staking. JPMorgan noted that liquid staking protocol derivative tokens have traded at prices below their underlying asset. However, they are converging to parity with Ether as the upgrade date nears. Concerns of network centralization due to these protocols have been raised. This report from JPMorgan provides an interesting insight into the upcoming Ethereum Shanghai upgrade and its potential impact on the staking ratio. It also highlights the potential for liquid staking protocols to provide liquidity to retail investors who may not have access to the 32 ETH required for staking. Furthermore, the report raises concerns about network centralization as these protocols become more popular in the DeFi space. Network activity on the Bitcoin blockchain has reached a level not seen since China banned crypto miners in May 2021. This is largely attributed to the Ordinals protocol, which allows for the storage of non-fungible tokens directly on the Bitcoin blockchain. This has resulted in a surge of NFT activity. Since December, more than 13,000 Ordinals have been minted, as well as larger block sizes and higher transaction fees. The popularity of Ordinals has sparked a debate among Bitcoin users as to whether this is an appropriate use of the Bitcoin blockchain. Satoshi Nakamoto has expressed reservations about non-financial uses. However, CryptoQuant points out that increased demand for block space is beneficial for the long-term security of Bitcoin. Additionally, fees generated by miners are also beneficial for the long-term security of Bitcoin. I would rate this article a 9 out of 10. It provides a thorough overview of the recent uptick in network activity on the Bitcoin blockchain and explains why it is happening. It also provides an in-depth analysis of the debate surrounding the usage of the Bitcoin blockchain for non-financial purposes, and provides evidence to support the idea that the increase in demand for block space and transaction fees is a positive sign for the long-term security of the network. The price of Ethereum's native token Ether dropped sharply on February 9. This was due to the U.S. Securities and Exchange Commission's decision to stop a cryptocurrency exchange from offering crypto staking services. This drop was the worst daily performance of the year. Ethereum, which is transitioning to a staking-based protocol in 2022, was impacted by the news. Analysts believe that the upcoming Ethereum update, Shanghai, could be a bullish event for Ether. However, some fear that the SEC may ban staking for retail investors in the future. Technical analysis suggests that Ether could face a potential 20% price correction in February. The 200-day exponential moving average is acting as support. Based on the investment criteria, I would rate this article a 6 out of 10. The article provides a detailed analysis of the current market situation with regards to Ethereum and its native token Ether, as well as the potential implications of the SEC's action on crypto staking. It also provides a technical analysis of Ether's current price movements and its potential future direction. However, the article does not provide any advice or recommendations on whether or not to invest in Ethereum, so it cannot be rated higher. Nick Bougalis, the former director of engineering at Ripple, has commented on the much-debated topic of how a CBDC could run on XRP. He firmly believes that this idea is absurd, as XRP is a digital asset, not a technology. This view is shared by Matt Hamilton, another former Ripple official. He believes that many people are misunderstanding the difference between XRP and XRPL. Despite this, Ripple has been actively recruiting blockchain specialists to work on CBDCs. This shows that their interest in the direction of CBDCs has become increasingly concrete. I would give this article a 6 out of 10. Although it provides some insight into the potential of CBDCs, it does not provide any detailed information about the investment opportunities surrounding them or an assessment of the potential risks and rewards for investors. It also does not discuss any specific time frame for when CBDCs may become available or viable. Bitcoin dropped to its lowest level since January 25 at the February 9 Wall Street Open. Traders are predicting further losses if the $22,400 zone is lost. U.S. equities were marginally higher and the U.S. dollar index saw a come down. Jobless claims beat expectations by 6,000 but still remained near one-year highs. This followed the previous week's blockbuster jobs data showing the lowest U.S. unemployment since the late 1960s. I would rate this article a 7 out of 10 on an investment criteria. It provides a good overview of the current market situation and provides useful insights on macroeconomic data, as well as price movements in BTC/USD on Binance. However, it does not provide any clear guidance or advice on how an investor should act in the current situation. Ripple CEO Brad Garlinghouse recently expressed his views on the global regulatory developments surrounding the cryptocurrency industry. He highlighted the positive steps taken by countries such as Dubai, Australia, and South Korea. These countries have set the tone by releasing comprehensive rulebooks, token mapping consultation, and guidelines. To differentiate between security tokens and payment tokens, guidelines have been released. Garlinghouse noted the commonalities between them, praising the leadership and work that is being done to boost growth and innovation in the industry. This positive regulatory outlook has been welcomed by the crypto community and has the potential to mainstream the crypto market. I would rate this article 8 out of 10. It presents a clear and positive outlook on the regulatory developments surrounding the cryptocurrency industry and the potential implications of these developments on the growth of the industry. The article also provides examples of specific countries that have taken steps to provide clarity and direction to the sector, which is very helpful for investors. Research has found that the collapse of FTX had a much greater impact on the price of Bitcoin compared to macroeconomic events such as rate hikes. A research paper from the Federal Reserve Bank of New York concluded that inflation was the only significant macroeconomic variable. It had an impact on the price of Bitcoin between 2017 and 2022. Active wallets also increased by 2%, indicating that Bitcoin was being moved out of centralized exchanges to self-custodial wallets during the period. Despite the Federal Reserve's rate hikes, Bitcoin has had a strong start to 2023, rising by a third from $16,557 to $21,888. I would rate this article a 7 out of 10. The research is comprehensive and thorough, looking at a variety of macroeconomic events and their impact on the price of Bitcoin. The authors also make a good point about the movement of Bitcoin out of centralized exchanges to self-custodial wallets, which could have a positive impact on the price in the future. However, the article is slightly outdated, as it was published in February 2022. Chris Burniske has revised his outlook on Ethereum. He went from believing it was guiding investors to Valhalla to predicting it may have to go through a drastic plunge before reaching its ultimate destination. He believes that the platform's fundamental value, such as staking, solutions, and decentralized applications, will continue to support its growth. This will in turn attract more developers and users to the network. However, due to the unpredictability of the cryptocurrency market, any sudden change in market sentiment could impact the price. I would rate this article a 7 out of 10. Burniske provides a good analysis of the long-term prospects of Ethereum and its underlying technology and infrastructure, as well as an explanation of the potential risks associated with investing in the cryptocurrency. However, he does not provide any specific timeframes or recommendations for when investors should enter or exit the market. A majority of those surveyed in a poll conducted by crypto law founder John Deaton believe the Ripple case will end in a settlement rather than a verdict. The poll was conducted in late December 2022. Ripple CEO Brad Garlinghouse stated that a settlement with the SEC could only be reached if XRP is deemed a non-security. Bill Morgan, a lawyer and crypto enthusiast, believes the SEC has more to gain from a settlement than a verdict. However, Morgan cautions that his viewpoint might be invalidated based on strong non-legal motives. This article provides a good overview of the current situation of the Ripple vs. SEC lawsuit, which is important information for an investor to consider before making a decision. However, the article does not provide any clear indications of when a settlement might be reached, or what the outcome might be. Therefore, I would rate this article a 6 out of 10. Bitcoin fell to bearish target zones on February 10 as bulls failed to hold important support at $22,000. This reaction to regulatory fears resulted in a 7% drop in February, with traders expecting a retest of $21,000 or lower. Long liquidations totaled $64.6 million for February 9, with $254 million liquidated in longs including altcoins. Some argued that if BTC USD holds the 200-day moving average near $20,000 or even $19,000, this could be an indication. The macro bottom is in for Bitcoin. Based on the investment criteria set forth, I would rate this article a 7 out of 10. The article provides a comprehensive overview of the market sentiment surrounding Bitcoin, including short positions, long liquidations, and potential macro bottom levels. It also provides in-depth commentary from traders and analysts, which helps to provide an accurate picture of the current state of the market. That said, the article does not make any references or changes to timeframes, which could provide additional information to investors.